Okay, so this is our both weekly and daily cycle analysis for the S&P 500. As I said in the opener, we are clearly in a rotational environment. In the early part of November, we saw both small caps and mid caps take the lead. They have since taken a pause, and of late we have seen the mega caps take leadership once again as Apple, Google, Meta, Microsoft, they've all taken really sharp moves on the upside, and that is finally leading to a little bit more of a move of late in the S&P 500. On the upside, we have levels here from 60.73 up to 61.76. 61.76 is not an unreasonable target here in the short term for a move up. You can see that next mid-cycle low is due 127 to right around 310, and the dominant trough is due out in that late May to June time period for that next key trough. Okay, so in the meantime, obviously in a rising phase, our RS on the weekly is firmly up. That is informing us of the phasing that we are in right now. We are still obviously in a rising phase, as you can all see. Only a loss of that low at 57.02 would change what is a bullish cycle structure to a bearish one. Hop over to the short term. On the short term, this looks a lot like Apple overall, I would say, because Apple formed a mid-cycle low on the short term right around here and then turned up. So this almost looks exactly like Apple right now, which is also in, just like the S&P 500, a bullish right-hand translation where we have used up almost this entire cycle rallying. It's leaving a very short window of time for a dip. Under that kind of circumstance, the base case on the downside would just be a test of this rising slim ribbon, which you can see currently is right on 60.25 to 59.63, and then another move back to the upside that makes a higher high. That's exactly what we are looking for in Apple, and that is what we're for here in the S&P 500, just for small dips and then another move right back higher. This is still a very bullish market in a bullish seasonal period, and just really not something to be thinking about fading right now.